It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I am Arjun Patsarthi. And with interest rates looking to spike up largely because of the fact of rising inflation in the global markets and the domestic market, and the heavy supply of bonds through government borrowing and state government borrowings, the worries for corporate India is that they will get crowded out and not be able to raise funds through the bond markets if the markets are all the money is going into funding the government borrowing and the state government borrowing. So corporates are looking to raise money very quickly and fast before the interest rates spike. And with interest rates rising already having risen, then there is a rush to raise money through the bond market, which is one way. It's very good for the bond market, especially the retail investors are now having a lot of options to invest in corporate bonds, and they are also able to get deals that are beating inflation. But they also need to be aware of what kind of credit risk they are taking, and that's where INR bonds comes in with the most information on proprietary credit score, and which doesn't really take into account the rating of the bond, credit rating of the bond, and a whole host of other things, including a seamless in-app investment process. Talk about quick invest app to get the best bonds in this market with all the options available, as more and more corporates are coming to raise funds. Now, just coming down to the options available in the fixed income markets, and as you all know, Let's Talk Bonds is about giving options to fixed income investors and financial advisors for their clients to invest in bonds and other fixed income products, which could be best for them to considering the current macroeconomic environment, as well as fitting into investors' portfolios on a risk basis. Now, coming down to the secondary market, we have seen stability in GSEC yields. The 10-year has stabilized to stand anything between 3 to 5 years is below 7% in the government bond space, and over that is over 7%. In the state development loan space, SPLs, anything over 3 years is over 7%. So 3 year SDL seems to be a good option for those looking at high safety, and provides a better alternative to a 3 year corporate bond as well, because the yields are also higher. And it's much better than a 3 year Bharat bond here as well. But if you take into account the 10-year Bharat bond here, which is closer to around 720, 730 levels, which is trading at those levels, it doesn't offer too much of a spread, except for the fact that since it's an ETF, the investors do have an capital gains tax benefits. They hold it for a period of 3 years. And coming down to the corporate bond space, AAA bonds, AAA housing finance companies and NBFCs and the manufacturing in a 2 year are all trading in a 620, 6% to 6.5, 2 years. 3 years would be anything between 6.5 to over 7% or more. The 3 years should be actually much higher, and also the 5 years are crossing well over 7%. The PSU in the PSUs we have IRS 13 and NABARD's 10 and 13 years all trading at over 7.10% levels, so they've also gone up. But and the lower rated bonds continue to stay well with a lot of interest at higher yields. They are very stable in terms of yields. So you have the uh, issuers like Pyramid 10 year at very stable at 10.5%. And the perpetual bond space, SBI perpetual is about 2026, 7.5% levels, slightly gone up from where it was traded. Bank of Baroda is over closer to 8% levels. And the others, Punjab National Bank and Bank of India, are all trading at closer to 8.5% levels, because the market believes that there They are a slightly weaker credit risk than state SBI, obviously the strongest, and Bank of Baroda, which is also very strong. Coming back to the corporate bond space, in the lower rated segments, you have the new age issuers like Navi Finserv, still offering bonds 8.75 to 9% 1 year and closer to 9.5%. 2 years, you have Shriram Transport's 3 year bond at 8.75, 8.75% levels. You have the MLD, you have Belstar at 2 years at 8.5. You have Ashirwad Microfinance closer to 10%. You have papers like Vivriti Capital for 2 years at 10.4% levels, and other MLDs that are also coming up very fast as more and more issuers are issuing bonds to cater to the high demand for MLDs given, especially for the high net worth and ultra high net worth segments of the market. So in the private placement, we have had a lot of issuances happening last week. So NTPC issued 2 year bond at 5.78% levels, very fine levels. Sundaram Finance, the strongest of the South-based lenders, 2 year bond to 6.2% level. Cholamandalam, again, a very strong South-based lender, 4 and 5 year bond to 7.32 to 7.5% levels. Fullerton, which is taken over by Sumito recently, issued 10 year bond at 7.65% levels, which is very fine, even that the spread is very low for a 10 year paper. Shriram Transport, like I mentioned, issued 7 year bond at 8.25%. This again seems to be very fine levels for Shriram Transport because shorter end point are also very much higher. Edelweiss Finance issued 2 year bond at 8.5% levels. The new Shakti Finance has been issuing bonds from 2 to 5 years, anything between 8.5 to 10%. The others include Adani Enterprises that came out with an MLD, 2 years closer to 8.7%. You've had IIFL Wealth coming out with a floater, 3 year floaters. You had and Edelweiss and India Bulls Housing, which will papers. Many of them are floating rate bonds as well. So these are some of the issuers that have accessed the market in the last 1 week, and we are going to see more and more of such issuers. You had so in the private, in the public debt issue of space, bonds that are coming up for public debt issues include Navi Finserv, you had Dani Loans and Services. All these issuers are covered by INR bonds with their own, with the best information. And for public debt issues, download the Quick Invest app for for seeing the kind of risk that one takes to invest in public debt issues. While the investment process is very simple, and INR bonds give you everything that you need to do to invest. Download the Quick Invest INR bonds app now for your best investments in public bonds. And do follow us on YouTube, Spotify, Apple Podcast, and Amazon Music. And do reach out to us. And if you do have any, if you have any questions, you can actually download the app, and there is a customer support. You can put out your questions to that, calling that number, and what you can do is give your questions, and the next podcast we will cover the top 3 questions that are most relevant to the period. And INR Bonds conducts every fortnight, Thursday at 8 p.m. Twitter Spaces with various topics. So if you follow us on Twitter, INR Bonds, at the rate INR Bonds, or you can follow me at the rate and you will come to know about the Twitter Spaces. And every fortnight, we also have masterclass webinars on the corporate bond market. And this is all meant for financial advisors to help them to give the best fixed income options for their clients, as also for investors who are looking to invest in fixed income best possible. Thank you very much.